Welcome to the Possible Promise Podcast. Every Monday, Wednesday, and Friday, we go live at 12 p.m. Eastern to break down the complexities of finance and point the way to financial success. Today is June 29th, 2020, and I am your host, Brandon Oliveris.
And I am his amazing wife, Christine.
This is episode 8, Building Wealth is Your Job. Welcome everyone to the podcast. Today is Monday, which I always love Mondays, and today's a good Monday, which I'll talk about in a minute. It's funny, I put this on Facebook a while ago, I think, but it's funny because when I had a job, I used to hate Sundays because it was the day before Monday, which was when I had to go back to work. Now I love Sundays because it means the next day is the open, the market, and I get to trade. And now I hate Fridays, for the same reason.
Yeah, I was going to say, anytime the stock market isn't open...
and this Friday it's closed. It's a short week.
Probably, the 4th is Saturday.
Yeah, but they close for the 3rd. It's so sad.
And you hate it when, there's a Monday that the stock market isn't open.
Yeah, exactly.
Oh my gosh.
Any stock holidays or...
Oh yeah, it's like the world ended. It's pretty sad.
Much, yeah.
You should see it. I have to live with it every day.
Well, it's just, and even I have a friend I've been talking to, and he even said, on weekends it's boring because there's nothing to do. So you have to try to find things. Yesterday I was like, I feel like I wasted the whole day because I just didn't really get anything done. And so, it was just...
well, Sundays are supposed to be restful days.
I know, but I hate when I waste time. So I'm happy today. But... and
today you said it was very busy.
Oh, this morning was hectic because I have an awesome topic for today, but I had to do a lot of preparation. I have a spreadsheet for everyone.
Of course you do.
Yep, I know. Spreadsheets, it's scripts and spreadsheets. Those are my things. I love anything to do with Excel or spreadsheets or whatever. Yeah. I just love spreadsheets. And so I'll talk about that later. But yeah, I was preparing that this morning and just figuring out what I wanted to say. And so that was a lot of fun. So I'm going to kind of get through our beginning portions, our beginning segments, so I can get to our topic.
You mean segment?
Well, the introduction right now.
Well, I guess.
Because I'm super excited about our topic today.
And if we're not careful, he might go 2 hours.
It's going to be 5 hours. So,
I'm going back to bed.
Poor Christine is not a morning person, not even really an afternoon person.
Hey!
So this is early for her. She doesn't like...
I don't know. Although this morning I was playing on Snapchat.
Oh, God, yeah. She started using Snapchat yesterday.
Well, I finally can.
Yeah.
I couldn't before.
I couldn't. I don't like anything with video. I don't like where I have to talk, except this notwithstanding podcast. But Twitter is my new thing. I love Twitter.
Yeah, follow him on Twitter. Follow Possible Promise on Twitter.
Yeah, we're on Possible Promise, one word. And so follow us on Twitter. I talk about the market a lot.
A lot.
Well, that's my job. It's literally my job.
That's true.
What do you want? Do we talk about, baking brownies?
We did last night.
We did do that yesterday. That's why I said that.
And they came out really good, and I did it pretty much all by myself.
Yes, I melted the chocolate and the butter because I like melting things. And I added the vanilla because Christine's not as good at liquid measurements.
No, I'm not.
So that was my job.
But I did the hard work.
She did everything else.
What's that? My watch.
You? How did that happen?
Because it's on theater mode doesn't mean...
Oh. Anyway.
I was itching my head and,
Well, don't do that.
Well, I can't help it.
So the market today. Okay, so Friday was ugly. It was bad. It was down over 2%. You remember it was down almost 2% when we were talking.
Yep.
It was down.
I don't
2%.
think you actually checked at the end.
No, we're not doing that. We said last Monday we're going to do that, and then we've been not doing that. So that's your fault. You have to remind me.
Oh, okay.
All right. So today, anyway, Friday was really down, and then it was kind of. Now my fear was we in the S&P especially. We were testing the 200-day average. And
what do you mean by that?
So the 200-day moving average is if you take the last 200 days and average them all out, that's the average you get. So for the S&P, it's right around 3,000, right?
Okay.
And so that's a support line or resistance sometimes if you're underneath of it. But with the prices over the 200-day average, if it were to break under it, that'd be a very, very bad indication. So we went right up to the line. We might have crossed a little bit Friday. And so I was nervous, and I was saying all weekend, I was nervous because if we broke through that line today because of more bad news, then that technical region would be lost to us, and who knows what would happen. It might fall more. So it held, at least so far. We're up quite a bit from that average, from that line. So I'm feeling pretty good about it. So let's look at, did I already do it? No. Where the indices are today. So, so the S&P is up about 30 points, about 1%. Everything's up. Well, I don't know about everything else. We'll see. About 1%. It opened up about only about 0.2% this morning. It slid a bit. It was a little weak in the opening. I was a little worried about it, but then it caught a bid, so that's good. Which just means people started buying.
I was just going to ask.
I know. The Dow is up just about 400, about 1.6%. I heard somewhere, I don't remember where, that Boeing is sort of bringing the Dow upwards.
Boeing?
Boeing, the airplane, you know. You never heard of Boeing?
No.
Boeing, they build airplanes.
Oh,
yeah, Boeing. Anyway, that's a Dow. That's a stock on the Dow. And they're kind of pulling it up today. And the NASDAQ is up 57 points, about 0.6 of it, actually lagging the others. That's surprising. 0.6%.
Huh.
And then the VIX it was a little bit up earlier, but now it's down about 4%. So, which was what I was expecting. We had this conversation in a group I'm in yesterday. Did I tell you? No, I didn't tell you about this.
I don't know if you did.
Someone was saying how they were going to buy long calls on the VIX, and I was saying...
Didn't we talk about this? Because you were picking on me about long calls.
Oh, yes. Oh. Yes, I asked you. Yes, that's right.
You asked me what I would do, but you didn't really tell me about anything else.
No, so, and I responded, and I said, that's interesting, because I'm actually kind of bearish on I think the VIX is going to go down. I think volatility is going to contract. And so we were kind of going back and forth. That person told me why they were, why they thought it was going to go up, and I said why I thought it was going to go down. But basically, I just said, the market's been rallying so much, and then last week it slid. People were scared about the rise in coronavirus cases, about reopenings being kind of halted, about bars shutting down in 3 states now at least.
That was stupid.
That they were open?
Yes.
Yeah, I agree. And so when, the VIX is kind of the fear index. So
yeah, that's right. You said that.
Yeah,
once.
so when fear spikes, you get a spike in the VIX. And so that's what happened last week. But what I tend to see, especially lately, is that, you have this negative event, the cases rising and openings kind of not doing so great. And then, the market kind of digests that news. It kind of gets used to it. It kind of, prices that in. And now we're at a new norm. and that's just kind of what is now. And so as that's happening, the VIX falls, volatility contracts, and because people are kind of used to that. Okay, that's what we know now. That's okay. It's still opening up. Things are still opening. It's going pretty well, I think, in New York, in other areas.
They're still in phase 3, at least where I.
Yeah, but New York City, I think, is going pretty well. And so now the market's kind of digesting the news, kind of getting used to everything. So as that happens, we're kind of finding a new normal. And as that happens, volatility contracts. That's exactly what I was expecting to happen.
Well, that's a good point.
Yeah. So that's exactly what's happening today. I think that's probably going to what happens this week. And so because of that, the market's up. And there's not really any super positive news, I don't think. It's just kind of people figuring things out. And Friday was a little overstated for the sell-off, a little oversold probably, especially when you added on to Wednesday's sell-off. So people are just kind of pricing in the new normal, and that's what today is. So yeah, that's what's going on with the market, and it's a shortened week. Usually the week of the 4th is pretty bullish, I've heard. But who knows what's going on? We'll just see what happens this week. So that's about it for that. But we will. Let's see, doing time. Yeah, we'll get into our. Actually, I changed how I do this. Before I go and say it, let me actually get to. I'm changing how I'm doing it. I'll tell you the reasons why later. I'm changing where I have my sound effects.
Okay. So,
here it is. We are getting into our weekly stock picks. So, you're not going to dance today?
Nah.
No? Okay.
I'm not. Well, I'm not feeling that great,
I know. So
if I do, then it would hurt.
Oh, okay. So our weekly stock picks every Monday. Let's see how I meant to do this. Oh, I meant to announce this Friday. A couple weeks ago I picked. No, Christine doesn't help me pick stocks. She should. Everyone tell her.
I try.
Sure.
You always say, which one should I pick?
I know. You always say, like, I don't know, what do you say, McDonald's?
Restaurants.
All
restaurants.
And then she'll say things that aren't even publicly traded. Like,
yep.
What did you tell me the one time? I don't even remember what you told me.
Who knows?
You told me a restaurant that's not even publicly traded.
You can pick on me. It's okay.
So anyway, Big Lots.
Ooh, I like Big Lots. They have good coffee.
Yeah, I picked them a few weeks ago.
You can say we as a company.
Sure. It's me. Me and my dog. Anyway, I picked Big Lots a couple weeks ago, and I was holding on to it. It wasn't doing much for a while, and then last Friday, I think Thursday or Friday, it had this huge spike where it went up like, how much? Like, I don't know, 20%? I think I gained almost like 18% on it. Let's see what it's doing today. It is... Yeah, it's even higher. So, I bought it at $35. It went up to like $41, I think, Thursday or Friday.
It's going to come back down again.
Yeah, probably. I don't know. Like, what happened basically is they raised their guidance for the second quarter from like 85 cents per share all the way up to $2.50 to $2.75 per share.
What's guidance?
Earnings guidance is like what they're expecting.
Oh, okay.
What's going to happen. And so they raised their guidance, and that was really good news, obviously. So investors bid up the stock, and it went up to like $41, even higher on Friday. I sold at 41, I think 25 or something, because it was going up so much. Like, it opened up around 40 something or 39 something, went up to 41, and I thought, I'm going to sell it, especially with the weakness in the market. I'm going to sell it before it goes down.
Yeah.
And it did go up a bit higher from there, and it is still higher from there, but I'm not going to complain about an 18% gain.
Right, exactly.
You know what I mean? So that was cool. That was a good pick. Now, let me see about our other What else? We picked... Was it Smith & Wesson last week? I think we picked.
I think so, but I don't... I think I remember.
I believe
You're
that's what it
supposed
was.
to look this stuff up ahead of time.
Yeah, well, I'm lazy.
Yeah, I think you did.
So I personally am up almost 10%, 9.3% on SWBI, which is Smith & Wesson.
Yeah, because I thought it was a hardware store.
Yeah,
Remember?
it's guns.
Was that last week?
I think
it was last week.
So, let me see, 54. So, my cost basis, I bought it at $18.13, obviously.
Yeah.
And it's now at $19.83. So
that's good.
It's doing really well. I'm up almost 10% on that. And then the other one I recommended is UniFirst. They're going to have
I forgot about that.
earnings on Wednesday. And let's see how they're doing. Oh, no, that's not... Oh, here it is. I bought it at $169.95. It's at $174.66. So I gained almost 3% on that. So not as much. I'm going to hold it to see how they do on earnings. They're still supposed to do really well. So that's what I did. So that's how our previously picked stocks did. So both pretty well. It was kind of dicey with how the market was last week. I'm surprised they're up. I'm doing something a little bit different today because we've been talking about options so much. So I will do an earnings. I almost didn't do earnings today because of I'm doing something a little bit different. But I loved the earnings stock I found so much, just the name of it, that I had to do it. So I'll get to that in a minute. But first, what I'm going to do instead of just a regular stock pick, I'm going to do an options recommendation, options pick.
Okay.
Yeah.
That's probably better.
Yeah, I just thought that'd be kind of cool. So the way I do this, I actually don't really put much work into it. I literally have a script that...
Of course you do.
Yeah, I have a script that finds the best stocks according to criteria that I put into it. So this is an option spread. I only do spreads. I don't do single options.
Oh, you're going to actually do it now?
Yeah. This is...
Ooh.
Yeah. All right, so...
You should have, like, a sound effect for, like, I don't know, drawing out of a hat or something.
The best I have is... There.
Okay.
It's not very exciting, though. It's just SPY, which is the S&P ETF, which is currently trading at 303.17. And so the pick I have for this, it's a call credit spread. Remember, we do pretty much exclusively credit spreads. And this is a 317 to 319 call credit spread for, let's see which date. I need to format this better so I can get the date more easily.
Yeah, you do.
August 7th. So on August 7th...
Well, the day after our anniversary.
Oh, yeah.
You better not forget.
I knew that. Just, I was thinking in an investing context.
Doesn't
I wasn't
matter.
thinking about... Anyway.
Okay,
Yeah, I'm in trouble.
whatever.
Anyway. So, August 7th, expiration, 317 short call and 319 long call. So you're selling the 317 SPY call, buying the 319 SPY call. So the good thing about that, it's only $2 wide. And as it is right now, remember with the call credit spread that the stock, you're neutral to bearish, kind of. But all it means is by August 7th, you don't think it'll go above 317, which, 317 to where we are, let's see, 303.17. So that's 4.5% of a margin you have there, right? So you're saying, I don't think the market's going to go up more than 4.5% by August 7th, basically. So, and anytime, the longer that it stays here or goes down or just doesn't go up that high, the more money you're going to make just from that time value decaying. We're going to talk about time decay another day, but just for so you know. Anyway, so the mid price on that right now is 70 cents. So that's $70 credit, because remember 100 shares. So with $70 credit on a $2 wide credit spread, that means you're only risking $130 because 200 minus 70. Remember how that works?
Yeah.
So $2 wide times 100 is 200.
Yep.
And you're getting $70 as credit. The most you're risking is $130.
Yep. I just can't do that kind of math in my head.
That's okay. That's why I'm here. So that's cool. So this spread, here are some things I look for. Let's see. The annualized return on this kind of spread is pretty much 70%. I look for spreads that have over 50% annual return. That's not something you can really calculate. I mean, you could calculate it yourself, but it's not worth it.
Your program does.
My program does. The probability of profit is over 71%. I look for probability of profit of over 70%. And the IV rank right now on SPY, we'll explain that another day, is about 27%, 28%. Which just means it's kind of high still. Not super high, but it's still pretty high. So, yeah, I mean, the biggest thing, the probability of profit, is you want that over 70%. And it is, it's 71%. And for the short strike, for 317, the probability of that staying out of the money is about 71% as well. A little under 71%. So that is my trade. I opened up an SPY trade last Friday, or else I'd probably do this one too. I probably will end up doing it. But just to summarize, the 317 selling the call, 319 buying the call for August 7th. That is our option spread for the week. So maybe I will buy this one and track it, and we'll just kind of see how it goes.
Well, isn't that why you did it in the first place? So you'd buy it?
True. So, yeah. So anyway, we'll do that, and we'll track it and just kind of see how it goes, and it'll be interesting. So that's the option pick for the week. I think that's cool. We'll just see. Sometimes I do options, sometimes I do stocks, but because I largely do options, I think that's kind of better.
Okay.
All right, so the earnings pick is... No, not that one. We already did that one. HELE is the ticker, and the company is called... Tell me if you've heard of this, because they're in the cosmetics industry, although I don't know how familiar you are with it.
Let's try.
Helen of Troy.
I have heard of it, I think.
Have you?
Very briefly.
Okay, I saw that, I'm like, that is too cool. That's a hilarious company name.
I don't know if I have or not.
All right, so Helen of Troy, HELE. They have earnings on July 9th, which is next Thursday before the market opens. Their estimated analysts estimate them to report earnings of $1.53 per share, but they could beat earnings by 11%, over 11%. So in their last, currently they're going at around 179, although that's outdated, so let's see what it actually is. Yeah, that was outdated. 186 today.
Oh, wow.
Their last earnings surprise from the last quarter was 13.94%, so basically 14% earnings beat in the last quarter. So that's really good, and they're, like I said, expected to beat earnings next Thursday. They're already doing well. So that's over a week out. So, as you probably remember, I like to pick stocks about a week out for earnings. Mm-hmm. So they have time to still run before earnings.
Right.
So that is the earnings pick for the week. Helen of Troy, it's in the cosmetics industry, and it's HELE. Cool. So I think that's about it for stock picks. And perfect. Yeah, we're running a little late, even though I didn't want to.
What?
All right. We're running a little bit later than I wanted to,
but
that's okay.
Of course we are.
Yeah. Oh, well. All right, so let's get into our topic. Building wealth is your job. So as I said, was super excited to get into this one. actually, I had no idea what I wanted to talk about today at first.
Yeah, you had trouble.
Yeah, and it took me a while, and then I thought about this, and I thought, oh, this is perfect. So we're going to talk about wealth today. Now, I'll talk about the spreadsheet in a little while once I get there. That'll be in a little while. But a lot of people have a misunderstanding of wealth. Okay? Just money is sort of a difficult issue for a lot of people.
Yes.
There's kind of this belief that, as they say, the rich keep getting richer and the poor keep getting poorer, and there's a wealth gap, so to speak, a divide between like the upper class or the rich and the poor, the top 1% and everyone else. And which, I mean, could be true. I think there's some truth to that. Mm-hmm. But unfortunately, when people talk about that kind of thing, they sort of do it in the context of, well, it's the government's fault, it's the rich people's fault, it's everyone else's fault, I'm a victim, I can't do anything about it. That's just not true. Mm-hmm. And that's what I'm going to try to show today. And so, whatever you are making, whatever kind of income you have, you can build wealth. Now, the best way of building wealth is in the stock markets. That's what we're going to talk about. I mean, as you build wealth, you can do it in other ways. You can build real estate, or not build, you can, buy into real estate.
You've always wanted to do that, haven't you?
I do want to do that one day, yeah. There are lots of other things you can do, but the most reliable, consistent way of building wealth that people have been doing for hundreds of years is the stock market. So, and especially, not just the stock market, but especially options. So we'll talk about it in a second. But, again, a lot of people focus on how much money they don't have. They never have enough money to, actually build wealth. And so the kind of common idea that people have about money is that they're stuck working for, let's say 40 to 50 years of their life, maybe in a job that they don't really like all that much. And one day they'll retire, and then they can enjoy themselves. They can travel the world if they can afford it, right?
Yeah.
So they kind of just expect themselves to get their paycheck every 2 weeks or whatever it is, and pay their bills, have a little bit left over for fun, and that's about it. And from a very young age, that just was not for me. No. I just knew on an intrinsic level that couldn't be the only way.
Yeah.
Or even the best way. That was, how my mother did it. She's retired now. She lives with us because she can't really afford that much, She tries to, she does go on vacation, but that's a long story. But she can't afford to do all that much.
Yeah.
Right. So,
that's where working got her.
That's where working got her, right? And not only working, but working and just spending everything,
yep.
Not actually saving it. And this is not a criticism per se. It's just what a lot of people do. They just, they work, they get their paycheck, they spend it, and that's about it. And then, when they retire, they have Social Security, and hopefully their kids will support them, right? Maybe they'll stick a little bit into a 401k, maybe into an IRA or something, but a lot of times it's just not enough.
Yep.
Because it's just not that immediate. It's not that close of a goal. So that's, I always knew for myself that's not the way. That's not even the best way or the only way or anything. And it's really not, okay? In fact, it's the worst way, because here's the thing, like, you could work for years and years and years and one day get fired for no reason.
Yep.
And then where are you? Well, now hopefully you have, you have savings, an emergency fund to live for a few months, but basically you're on the clock until you can find another job, to make more money. Like you have limited time to, live on that savings until you can find another job. And then it's just the cycle repeats itself. Right? And especially in the U.S. where most states are at-will states, you can be fired for any reason at any time. Job security, I mean, in my opinion, job security is non-existent. I mean, for some industries, but they can get rid of you for any reason. So how much security is that, right? When I had a job, that was always on my mind. Like, okay, if I don't do well enough, then they can just say bye, and there's nothing I can do about it. That's not the way that we're supposed to live.
No,
not to me. And when you look at the actual wealthiest people, that's certainly not how they live.
No.
They don't put in a whole ton of work, 40 hours a week, and get paid and, that kind of thing. That's not what they do. Usually they put in a small amount of time and get a lot out of it.
Yep.
So that's, I wanted to find another way, and there is definitely another way. But I just want, especially people don't think about this. Again, if, the lack of security, where if you lost your income tomorrow, if your next paycheck didn't come in because, you got fired, or maybe you just got one more paycheck and that was it, how long would you last? Would you last 2 weeks? Would you last a month? Would you last 3 months? Would you last 6 months? I mean, they say the recommendation is to build a 6-month emergency fund, and that's great. But even then,
it's going to run out.
It's going to run out. You have to find another job and start the cycle all over again. And basically, you're just receiving money to keep living from a job, right? That's not very secure.
No.
So what if there is a way of building wealth, building a secure foundation or base of wealth that supported not only you, but then you could even pass it on to your children and future generations, if assuming you have children. If you don't, you can pass it on to someone else. I mean, that's, But what if you could build a secure foundation of wealth that would support you as long as you needed it and future generations? Then we wouldn't be in this predicament.
And imagine if everyone did that.
Imagine if everyone did that, right? And from my perspective, and there's no victim blaming in this, there's nothing, it's just lack of knowledge and lack of putting into practice. If you have that knowledge, anyone, in my belief, pretty much anyone can do this, right? You have to learn a little bit, you have to apply that knowledge, but pretty much anyone can do this. If you don't make a lot of income, it might take a little bit longer, but pretty much anyone can do this, right? So what I'm talking about is options. I've talked about options, with regular stocks, usually the common advice or the common wisdom is that you can look to maybe 9 or 10% gain a year in the stock market, right? With just regular stocks, or even just following the index, the market as a whole, and that's great. But with options, and I've talked to people who have done this longer than I have. In fact, I talked to a guy this morning, kind of verifying my numbers a little bit. And he's been doing this for a long time. He's going to be on our podcast in a couple weeks, actually, so I'm really excited about that.
That'll be so much fun.
But, he was saying that easily, like if you... this is for selling options, easily you could get 50 or 60% in a year, right? And you can do that reliably, regularly, consistently, not just, if the market's going up, because it doesn't always go up, obviously, as we can see this year. As we saw in 2008, went down for a while. That's an understatement.
Yeah, well, I didn't know about it then. I wasn't paying attention.
Yeah, so, with options, you can make, let's just say 40, 50, 60% as a seller of options on a regular, reliable basis. And no matter what the market's doing.
Right.
And that's what I hope to teach through, Possible Promise, through my podcast, through everything else that I do. That's what I've been doing. And it works. And it's just math. It's just numbers. It's probabilities.
And it's cool that you can make money whether it's going up or down. I think that's fascinating.
Oh, yeah. I love that. Yeah.
With stocks, you can't really do that.
Exactly. Right. With stocks, I mean, you can short stocks, but it's just difficult. But with this, you can actually target a probability. Like I said, over 70% is what I do. And as long as you target that, you're going to win 70% of the time or more, depending on how you manage your trades. But you will win, and you will win consistently, and you will grow your portfolio size, right? And so 40, 50, 60%, some people will say less, some people will say more, but that's just what we're saying. But, the thing is, you have to be patient. So a lot of people in groups that I'm in, and I've talked about this, will buy options and they'll say, oh, I'm going to double my account in, 6 months or in a couple weeks or whatever. And then they end up losing everything.
Good luck with that.
The thing is that when you start doing it the right way, when you build a strategy that works, that can consistently return you 50% approximately a year, even anywhere around that. I mean, 10% for stocks, like looking at 40, 50% for options is amazing. That may not seem like a lot. Like if you start with $10,000 and you say, oh, well, in a year I might have $15,000. Woohoo! Well, that's the thing. You have to have patience because once it gets going, the thing about wealth is that it's self-sustaining. Not only self-sustaining, but self-growing. Mm-hmm. So when you get a paycheck, that paycheck will be the same week after week after week. You might get a promotion, you might get a raise, every few years or whatever. It might grow by, a few percent every year. But largely speaking, it's going to come every week. It's going to be the same amount. When it's done, and it doesn't really do anything to grow itself or to sustain itself.
That's a good point. I didn't think about that.
Right. I mean, it's a limited resource. When it's done, it's done.
Yeah.
But with wealth in general, especially with investing, when you start getting significant amounts of money, it is self-sustaining. It is self-generating.
Yeah.
Meaning that the more you have, and the more it'll grow. The faster it'll grow.
Right.
Right. So in the beginning, it can feel really slow. Trust me. I've done that.
You've been frustrated. You still get frustrated.
I do, yeah. And it's like, oh my gosh, it's just so slow. But, I was looking at the numbers over the weekend, and especially this morning, and it's just amazing how quickly it can build up.
You mean like your numbers?
No, just in general.
Okay.
Numbers in general. What if you can get like 50% a year or even a little bit less, how quickly that can build up. And so it's just amazing to see how that works. And there are a few stages of wealth building that I'm going to talk about. Now, traditionally, they divide it into two stages: wealth accumulation and wealth distribution. Okay. So wealth accumulation is kind of in your working years when you're adding to your portfolio, you're investing, you're adding a little bit every month or every paycheck or whatever.
Like what you do with...
Right. You're not withdrawing anything. Your goal is just to grow it, to accumulate as much as you can before retirement. And the wealth distribution, let's say you retire, whenever it is, and then you start withdrawing instead of putting into, adding to the portfolio.
Don't you take out profits though?
Sure, yeah.
Like you don't do it that first way.
No, and that's why I'm going to talk about this in a little bit different way.
Okay.
The way I want to look at it is actually in 3 stages. So the first stage is wealth creation, which is kind of just like wealth accumulation. A nickname I give this all the time is the bootstrapping stage.
Ha! Yeah, I love it.
So, if you ever heard the expression, like, pick yourself up by your bootstraps, obviously it's impossible to do. But bootstrapping just means, like, using your own resources to start generating wealth.
Yeah.
right?
Which you have to sometimes.
You have. Well, not only sometimes. You cannot, you cannot make money without having money.
That's true.
Right? If you put nothing into the stock market, you will get nothing out, no matter how long you wait, right? You have to have money to make money. And so it's kind of like, let's say you plant a seed. You know how I love my seed metaphor.
Yes.
You plant a seed, and if you don't plant a seed, you're not going to get a tree.
Yeah, it's true.
You're just not, no matter how long you wait, you're not going to get a tree, But if you plant that seed and you wait long enough and you take care of it, you'll get that tree, right? So this is wealth creation. You're planting that seed, you're bootstrapping. It's difficult, it's slow, because you are starting with basically nothing. And if you have something to start with, that's great. But, a lot of people are starting with basically nothing. They're just adding to it every paycheck or every month or whatever. And that's it. And so that's fine, right? That's the first stage. And I'll talk about the spreadsheet in a minute. The second stage is wealth growth. In wealth growth, it's basically the difference is maybe you stop adding to it. You might even start taking a bit out, okay, as long as it still grows. Mm-hmm. But wealth growth is where it's large enough that it has built up enough momentum where it's going to start growing on its own. Mm-hmm. You don't need to add to it.
Is that where we are?
It just depends how you look at it. So wealth growth is where, that seed's planted, the sprouts come up, the tree's starting to grow, and now you're just waiting for it. Now you're just waiting for it to grow.
Right.
And it builds that momentum, and it starts growing and growing and growing. And then just to kind of go with the tree metaphor, the last stage I talk about is wealth harvest.
Ha! I love it.
Because, let's say it's an apple tree or something. That's when you get the apples, you pick off the apples from the tree, you enjoy them, you're supported by the thing you've grown. And that's where maybe you were withdrawing a little bit before, but now you're actually living 100% off of it. You're withdrawing a lot more, and it's still growing. Now, that would be kind of like your retirement, right? Mm. Now, the thing is, then, and we'll show the numbers in just a second, that it will keep growing and growing and growing and growing and growing. It's like if you plant a tree, let's just use that example again, it might take some years to grow, right? But once it's grown, it's not like when you die, you don't chop down the tree. Right? Yeah. Whoever lives there next is going to also enjoy that tree and whatever it produces. Your children or whoever, whatever. And then your children's children and so on and so on and so on. And that tree can last, trees have been known to last thousands of years, right?
Oh, yeah.
So that's kind of how this is. Once you build that wealth and you set it moving on its own, you set it on its own momentum, it's going to keep growing. And you're here, let's say, from the day you start investing, let's just say you start around the age of 25, right? And you retire maybe 65, maybe earlier. But let's just say you have a good, let's call it, 75 or so years, right? Could be less, could be more. And so, but once you're done, then where's it going to go? You can't take it with you. Mm-hmm. So you pass it on to someone else. You pass it on to your children.
And this is interesting that you said it like this, because you just said you can't take it with you. And that's
right.
why, spiritual people especially will be like, why? What's the point?
Right. Exactly.
But really there is a point, because you're building a legacy for your next generation.
Right. So you had to go through the hard work of planting that seed and tending it and watching the tree grow. But once it grows, it's done. And it's going to be there for years and years and years and years and years and years. And your children and your grandchildren and your great-grandchildren will enjoy the result, the outcome of that tree being there. And wouldn't it have been better if your parents had planted that tree then you would have just been able to enjoy it from day one, right? So, or their parents had passed it on to them, who would pass it on to you.
Oh, that would be so weird.
Wouldn't that be even better? We're just talking about the tree still, but this works with wealth. Mm-hmm. The thing that I'm talking about, everyone has the capacity, and I will tell you why in just a minute. Everyone has the capacity to plant that seed, to start that process going, to start building that wealth, to put a little bit into the market at a time, to learn what they need to learn. And yeah, that bootstrapping stage is really irritating. It can take you, depending on how much money you put in, 10 to 15 years to really get going. To let's say the first goal of this whole process is $1 million. Mm-hmm. If your family didn't pass on to $1 million, then it could take you 10 to 15 years, depending, or maybe less, depending on how much you put into it. It could take you 10 to 15 years to reach that $1 million level. But once, and I'm using that level because once you reach $1 million or so, it really starts building up momentum quickly, right? It's just amazing. So yeah. That bootstrapping stage, yeah, maybe you have to take out a decade of your life and build that up and bootstrap your foundation of wealth, your base of wealth. But once that's done and you get that thing moving, you can live off of it and still grow it for decades and even more. Okay? And once you are old and you have not only $1 million, but millions of dollars, let's assume, if you've done all of this, again, what are you going to do with it? Sure, you could give it to charity or something, but why not pass it to the next generation? If you have children, pass it on to your children. If you don't, then pass it on to nephews and nieces or to whoever else. To friends, if you don't even have that, or to whoever, the next generation. To someone else where they don't have to bootstrap. Like, why is it that any of us have to do this? It's because our parents didn't do it. I'm not trying to blame anyone. But, like, if my father's not in the picture. If my mother had done this, or her parents, or whoever, and passed this on, had built up this wealth, had bootstrapped, as I'm saying, had planted that seed and tended after it and built that up, I wouldn't need to. Now, I'm happy to, because I'm learning everything I need to learn, but I would rather have had that from day one, to let's say, pay for my college and then to support myself and now Christine afterwards, Like,
I'm not a gold digger, I promise.
But that would have been great. I wouldn't have had to work at all. And why should you? Some people say, if you don't work, that's lazy, and why should you? If working, let's just say working is a mode of getting money, right? Now, some people enjoy it, some people don't. But what if you didn't have to? What if you could just do whatever you wanted to do?
Without getting paid.
Whether it produced money or not,
right.
That's kind of just a side effect.
That's how I feel about massage therapy.
Right, exactly. But what if you didn't have to worry about that? What if,
you just want to do it.
You just do it, and if it gives money, great. If it doesn't, great.
Yep.
It's just sort of like, oh, cool, okay. I'm just doing what I love to do. But when you have to work for money, it just kind of takes out the enjoyment a little bit.
Yeah,
and then you're worried about, what if this comes to an end? But if you have that foundation of wealth sitting there growing all the time, it doesn't matter if you lose that first job, or let's not even say job. If one project comes to an end, then you start another one, or you don't. You might hang out for a while and do nothing.
Or
just
travel everywhere.
Travel the world for a few years or whatever. Isn't that, wouldn't that be better than having to work for money? Wouldn't that be better?
Yeah, I agree.
And so, I don't resent at all that my mother didn't do that. I'm happy to learn about this. I'm just saying, like, if I have children, I would like to pass this on to them where I say, you know what, I had to worry about money, but you don't. Right? Let me teach you how to keep this tree going. And you will have something that supports you for a lifetime.
Yeah.
And if you have children, they will have something that supports them for a lifetime. And so on and so on and so on. I mean, isn't that just so much better? That way they have the freedom from day one, not 10, 20 years later, to pursue their passions in life, not to have to work for money. Do something that they don't necessarily want to do just because it pays the bills.
Because that's not your life purpose.
No, not
your
at all.
life purpose is to enjoy it and do whatever you want to do.
Right.
And that doesn't mean that you have to get paid to do it.
Exactly.
That's exactly how I feel.
Right. So, I'm going to... Let's get my spreadsheet out here. Alright, so like I said, I have a spreadsheet. If you are on possiblepromise.com/live, if you're listening live, I have a form. If you enter your email address, you can download that spreadsheet. If you are listening to this later, if you go to the show notes, possiblepromise.com/8, and you scroll down, you can download, if you enter your email address, you can download this spreadsheet and play around with the numbers. So what I have here is I have these different phases, create wealth creation, growth, harvesting, or harvest, and then I even have generations, like first, second, third generation, right? You're passing it on to your children. And so in the first phase, I'm just saying, let's say 20 years. Now I'm saying it takes maybe 10 years to reach the $1 million level. That's kind of definitely, once it reaches that level, you're pretty good, right? But let's just say you're adding to your foundation of wealth in those first 20 years. Let's just say every single month you're adding a certain amount, and in the spreadsheet you can put in how much you're going to add for 20 years, right? So if you start at 25, this is until you're 45, right? And if you do that, now by default I have an annual return of 30%. Now I could have gone with 50 to 60%, and you can, but I'm just saying, like, even if you don't do the best you could possibly do, even if you do a bit less.
Yeah, I think the minimum is better.
Right. 30%, which is very reasonable with options, then great. Now, I'm saying, now by default, I have your monthly amount you add in, $1,000. Right? Now, some people might scoff at that and be like, that's half of what I make in a month, or, that's almost all of what I make in a month. This is just, just the base number, right? You can reduce it, you can add to it, whatever. I'm saying $1,000 a month. You can make it $500. I mean, I recommend this is your road to freedom. I recommend doing as much as you possibly can.
Sacrifice now to get later.
Exactly.
Yep.
No, not excessively. I mean, you want to enjoy life and whatnot, but just do add everything you can every month or every paycheck or whatever to your portfolio. So I'm just saying you're investing $1,000 a month. Obviously not withdrawing anything. So in the spreadsheet, there's a separate column for monthly deposit versus monthly withdrawal. Okay, so in the creation stage, you're depositing, you're not withdrawing. After 20 years of 30% gains a year, $1,000 a month, and Christine's, anytime I ask her to guess something, she guesses way over what it is.
Like, not always.
Any guess?
10,000?
No, like $1,000 a month.
Oh, true.
That would be 10 months.
For 20 years?
For 20 years.
500,000.
Nope. You would get $6 million.
Oh, I was like way lower.
Yep.
You told me not to be conservative.
I know, that's good. I'm glad. I just don't want you to be like 20 million.
Even 6 million's a lot.
So 6,253,000. That's $1,000. And now that is accounting. At first, I didn't. It's actually 8 million and some if you don't account for inflation. I'm accounting for inflation, and with that, with an average inflation, this, in today's dollars, not just, in today's dollars, it's $6 million. So you're not losing any buying power there, you know. You know what inflation is, right,
Yeah,
Christine?
of course.
Yeah.
Yeah.
Okay, so we're going to do Ask Christine.
Oh, no.
So the question for Christine is, what's the average annual inflation rate? Hang on, let me get my timer going. Ready?
Is it, like 1%?
Okay. I'm gonna say... Oh, no, I didn't want to do that. Oh, phooey. Okay. There.
Oh.
Say it again.
1%?
Okay. It can be. Okay, I'm being a little mean. It's around 2 to 3% usually.
Okay.
It's not like a definite... that was fun. It's not like a definite...
I was sort of right.
You were sort of right. It's not an exact number. Usually they target 2%. Generally, on average, between 2 to 3%. I'm assuming...
I was close.
You were close.
I thought I've heard it was like about 1% or more.
Yeah, it's usually about 2%.
Okay. Well,
I'm assuming 2.5% just to give a little wiggle room. Okay, so in this, and you can actually set it in the third column over, actually fourth column over, you can set inflation rate, and you can hear here it's 2.5%, Christine.
Yeah.
And so after 20 years, $1,000 a month, you're going to build over $6 million. Now,
that's crazy.
Yeah, that's amazing. It takes about 10 to 12 years to really get $1 million going.
I was going to ask.
Yeah.
Yeah.
Now, if someone says, "Oh, I don't make that much," you know, that's my. I tried it. That's what I try to do usually, or have tried to do. It just depends.
But you made a good bit a year, though. Remember?
Yeah, that's why I'm saying, like, if someone says, "Oh, I can't do that. I'm on minimum wage." All right, so let's just say even $500 a month. You're still going to get $3 million after 20 years. Okay, so you're still going to be a millionaire after 20 years. I'm very sorry, it's not $6 million. It's still $3 million, but yeah, that's.
I guess it just depends how much you want in the long term, and
exactly.
You know, and I don't like to use the word sacrifice, but it kind of is because.
Oh yeah.
When you're first starting, you have to. I don't mean work for it. That's not really the right word, but you kind of do too.
Right. Oh gosh, I'm sorry. It's going to go a little over. I just want to get through this worksheet.
Yeah, go ahead. I won't talk anymore.
No, it's fine. But so if you add $1,000 a month, you know, for 20 years, you can get to about $6 million. This is a 30% return. Now, just real quick for curiosity's sake, if I did do 50% in $1,000 a month.
Whoa!
You get, it adds up.
Oh, sorry, 72 million.
72 million. That's why I said, like, I'm going with a conservative number. So we're going to put it back to 30%. And so we're at, like, 6 million. Okay, so yeah, I mean, depending how good you are with options and how well you do, you could be anywhere in that range. You know, 5 million to 70 million, anywhere in between. I mean, it's still millions, right? That's pretty amazing in 20 years. So just imagine. You put in $1,000 or even $500 a month, and in 20 years, there's no reason you couldn't be a millionaire. 0 reasons. Okay? I just want that to sink in. Before anyone goes and says, I'm poor, I can't do anything about it, it's the government, it's rich people, it's this, it's that. Just put in $500 a month. Put in $1,000 a month if you can.
Most people can do.
Most people can put you can put in a lot more than you think you can, because it's that or work the rest of your life as I hate to use the word slave, but you're a slave to work, because if you stop, you starve.
And you know, and it's better to work for 20 years than 40.
Exactly. So
you're cutting it in half.
Yeah, exactly. So even for 20 years, and you could reduce this even more. It just depends. But let's just say 20 years. You could play with that number once you get the spreadsheet. The growth phase. Now the growth. Oops, I'm very sorry about that.
That's you.
That was me. Oh well.
Oh, it's
the doctor. So the growth phase. I'm also setting that at 20 years because this is from, like, let's say if you start at 25, 20 years takes you to 45, another 20 years takes you to about average retirement age. So this is still, you're not that old. You're still pretty young. I mean, in your 40s. And
so
then
now we're at phase 2, which would be
phase 2 is your wealth growth, right? You're not depositing anything anymore. You've stopped after the creation stage, or the bootstrapping stage, as they call it. Now, I reduced this to 20% because it would be an astronomical number if I put it at 30%, and because maybe you want to scale back a little bit. Maybe you want to take it a little bit easy after 20 years, 20% is still very reasonable, right? So I'm just saying 20%. You can set it at 30, you can set it whatever you want to. I'm setting it at 20%. Inflation is still 2.5%. You're not depositing anything. Let me remove that.
So you're done depositing in your portfolio at all?
Exactly. You're done depositing.
I thought you always would deposit in your
Nope. Because even without depositing a single dollar and getting 20% return on that $6 million, you get... Hang on, this does deserve a drum roll. $157 million.
Whoa.
That's why you don't need to deposit anything.
But what if, like, the stock market goes bad and you lose it? Or
That's why we do options. Yes, a really bad event can happen, but with options, pretty much no matter what the market's doing, you are going to gain.
So you're always trading, but you're stopped depositing.
Exactly.
Okay.
You're still trading, but you're not depositing anymore, and you're not trading as vigorously or as much. You're just relying on maybe 20%, which really isn't that bad. And you're still, out of $6 million after 20 years, you're going to still have $150 million plus. Wow. Now, I did add, let's say after 20 years, you say, I have $6 million. I'd like to withdraw a little bit of that. Thank you very much. And you start saying, okay, well, I'm going to withdraw $20,000 a month.
Whoa.
Right. So how much do you think that would affect? That's like a lot of money, right? And I have only $6 million, so how much is that going to affect my balance? Okay, well, $20,000 a month, and you withdraw that. That brings you down to a very sad $121 million.
Oh.
So all I'm trying to say is, in your growth stage, you can enjoy it a little bit, a lot, really. I mean, that's a lot.
Yeah.
And still grow. And that's 20% a year. That's withdrawing $20,000 a month. You can play with that, reduce it, increase it. I mean, you might say 10,000 is great, but let's just say with $20,000 withdrawn a month, after 20 years, you still have $121 million. Yeah.
That's crazy.
Okay, so.
Wow.
Phase 3 is your true, where you just go crazy. Your true harvesting stage. And this is where you really there's so much you could never use all of it if you even tried. I'm putting this at 30 years.
So this is when you're 60.
65 to whatever,
Till when you die.
And so I'm putting this at 10%. Let's just say I'm done with options. I've been trading for 40 years. Maybe I might do a couple options, but mostly I'm just going to stick the money into an index ETF and gain 10% or so a year, right? That's not a bad assumption, right? So 10% is my assumption. You still have a 2.5% inflation rate. You're not depositing anything. I'm actually going crazy and saying, you know what? I'm 65. I'm going to withdraw $100,000 a month. I mean, you could do a lot more. This is just to demonstrate.
I don't know what you do with that more than that.
I don't. This is just to say, let's say
unless
over
you're
$1 million.
Building a house.
Let's say over $1 million a year, right? Because
Okay.
some people are paid that, like CEOs and stuff.
True.
You'd still have almost $1 billion by the time you died. You have over $900 million.
That's crazy.
Now, you could withdraw less and have more at the end. You could withdraw more and have a little bit less at the end. It really doesn't matter. But you'd have essentially $1 billion, just about. Now, what do you do with that?
Give it to your family.
Like, you've built that tree. You've built that foundation. And do you just waste it? No. You pass it on. You teach your children, this is how you invest. This is how you trade options. Or just, you know what, just throw it into some index option or some index funds.
I think all kids should learn.
I do too, but I'm just saying, even if they're super lazy and you just say, you know what, just throw this in an index fund and that's it. I'm just keeping it 10% just because. You could do 20, 30, 40%, whatever. But I'm just saying, you know what, let's just say 10%. You would still have, and I'm just saying another 30 years for the next generation, whatever, you would still have $8 billion, over almost $9 billion. And this is still withdrawing whatever you want to withdraw a month, right? You could play around with these numbers, but that's basically $8 to $9 billion. Mm-hmm. And then you do the same thing. Your children pass it on to their children, and they withdraw whatever they want to withdraw. They keep it going. You're going to have $70 billion. It just keeps growing. Like, I don't care. Let's just say, for example, just for fun, I'm going to withdraw $10 million a month. That's ridiculous, but let's just say you're going to still have... Oops. No, let's not do that. Let's say $1 million.
Why
there
did
it is.
you...
Okay, if you withdraw $1 million a month...
Yeah, who's going to use $10 billion a month?
I said $10 million, not $10 billion.
Oh, $10 million.
$1 million a month, you're still going to have $69 billion. I mean, it's just ridiculous. So I'm saying this is so much money. You could not possibly go through it all. Your children could not possibly go through it all. Your grandchildren could not possibly go through it all. And after 3 generations, you're easily in the hundreds of billions, just assuming it's still going. So I'm just saying, I know this is over. I know this is, I managed time very poorly here. I'm just saying, imagine building up this kind of foundation of wealth throughout your lifetime, through investing, through selling options, which doesn't look that exciting because it's only, 50% or so a year, or less. Let's just say 30%, like I did in the spreadsheet. In a matter of a couple decades, you would have far more than enough money than you could ever know what to do with. And I've made a lot of assumptions that decrease even what you would get. I mean, you could, look at Warren Buffett. He's one person, one lifetime, and he's built up, tens of billions of dollars. Right? I don't even know what his true net worth is. It's just a lot. Right? So this is just, like, in theory, this is just, I don't want to say a minimum, but this is just to give you an idea of what's possible. It could be anywhere from that to much, much, much more to a little bit less. It doesn't really matter. The point is that after a few decades, even after 1 decade, you could easily have $1 million just from scratch, just from nothing.
Yeah. Just
by putting a little bit in every month, learning how to sell options, whatever, you'd easily have $1 million in a decade. I mean, you start today, in 10 years, you could have $1 million. I mean, it's literally. All right?
And I think some people get kind of frustrated or discouraged because they start when they're 30 instead of 25. Or...
Oh, sure. And I'm 31, and I wish I was farther along than I am. But, that's still young. Right?
It really is, because it's only just a few years different than 25.
Exactly. So all I'm saying, in 1 decade, you could easily have $1 million, if not in less time. In a few decades, you could have several millions or tens of millions of dollars and be living off of it. You could quit working, probably, if you really tried, in 10 to 15 years. I'm just putting out 20 years, just as an example. You could probably stop working in 10 years with no problem, and it would be easy.
Yeah.
Maybe less time. It's just saying, like, it grows. Wealth is self-generating, self-sustaining. And once you do it, it's done. It's going to build momentum. It's there for your children. It's there for their children. It's there for their children. I mean, why would you not want to set up your children in a place where they don't have to do everything you had to do?
Yep.
Right? So, like I said, I mean, I wish that would have happened for me. It would have been great. But it didn't. So it's my job. It's my job to build wealth for future generations. That's how I see it. That's why I said building wealth is your job. Nothing else. Building wealth, that's your job to create a better life for you and then for those who come after you.
Yep.
So hopefully that makes sense. I know that was a lot.
I love this. This was awesome.
Yeah, that was, I know it was quite a bit, but it's just, I think it's so important. Play around with the spreadsheet, play around with the numbers. I'm not, exaggerating anything. I'm not, the numbers are real. It's what they are. You can play around with them yourself. Download the spreadsheet. Like I said, if you go to possiblepromise.com/8, you can see the show notes and you can download that spreadsheet and just check it out yourself and just start selling options. Just learn what you need to learn and just do it. And I will keep sharing what I can so you can keep, so you can start doing that if you're not already. So I hope that makes sense to everyone. I know it's quite a bit, but I'm so passionate about this. I believe everyone can do this. Not only can, but should do this.
Yeah.
This is your job. This is what you owe to yourself. So with that, we will see you on Wednesday for another episode of the Possible Promise Podcast.
Have a wealthy day.
Bye, everyone.
Bye.